Hi everyone, good to see you again all. I hope you all will be fine. Please check Iraq latest news updates. The Iraqi Parliamentary Finance Committee is set to host the central bank governor, Ali Al-Alaq, to discuss the significant increase in the exchange rate of the US dollar against the Iraqi dinar. A parliamentary source informed Shafaq News Agency that the meeting is scheduled for the afternoon and aims to address the steep rise in the dollar's exchange rate and the bank's measures and plans to tackle this surge. Over the past 2 days, the exchange rates of the US dollar against the Iraqi dinar have witnessed a substantial increase in both Baghdad's markets and Erbil, the capital of the Kurdistan region. This surge followed Washington's imposition of sanctions on 14 Iraqi banks. In response to the situation, a member of the Parliamentary Finance Committee, Deputy Muin Al-Kadhimi, revealed to Shafaq News Agency that the government attempted to control the exchange rate by reducing the dollar from 145 to 130, and managed to provide remittances to countries that could receive them. However, Al-Kadhimi stated, there are other countries from which Iraqi traders import, but the U.S. sanctions hinder sending these remittances, forcing these traders to obtain dollars from the parallel market. This, in turn, keeps the dollar rate high in this market. Additionally, the recent actions of the U.S. Federal Reserve in refraining from dealing with several private banks have further contributed to the dollar's rise, reaching 155. Regarding the actions of the Parliamentary Finance Committee concerning this matter, Al-Kadhimi emphasized, there will be a hosting of the central bank governor and the Ministry of Finance during the next week to identify the real reasons behind the inability to control the parallel market rate. It is worth noting that the U.S. Department of the Treasury imposed sanctions on 14 Iraqi banks last Wednesday as part of a campaign targeting Iran's dollar transactions. And gold prices held steady on Monday as investors awaited a U.S. Federal Reserve meeting this week where the central bank could signal a pause in interest rate hikes from July. Spot gold was little changed at $1,960.01 per ounce by 0536 GMT, while U.S. gold futures fell 0.2% to $1,961.80. With a Fed rate hike in the July meeting nearly certain, a positive outlook for gold revolves around central bank buying to drive long-term gold prices, said Michael Langford, Chief Investment Officer at Scorpion Minerals. Data on Friday showed COMEX gold speculators raised their net long position by 35,288 contracts to 135,907 in the week ended July 18. The dollar index inched lower, but held near its more than 1 week peak hit on July 20, limiting gold's rise as a stronger dollar makes the metal more expensive for holders of other currencies. Along with the Fed, the European Central Bank, or ECB, and the Bank of Japan are also meeting this week. Market focus will be on what Fed Chair Jerome Powell and ECB President Christine Lagarde say about the future. Gold is highly sensitive to rising interest rates as they increase the opportunity cost of holding non-yielding bullion. The level of perceived dovishness or otherwise from the Fed likely to have a big say in whether The precious metal makes another run towards the $2,000 level anytime soon, said Tim Waterer, chief market analyst at KCM Trade, in a note. Traders are also awaiting second quarter U.S. GDP data on Thursday, followed by Personal Consumption Expenditures Index figures for June on Friday. Among other metals, spot silver rose 0.1% to $24.60 per ounce. Platinum and palladium fell 0.1% to $960.78 and $1,289.51 respectively. Platinum could be undersupplied for the rest of 2023 due to substitution in autocatalysts and lower South African mine production, UBS analysts highlighted in a note. Thanks, take care.